Hello, everyone, and welcome to another edition of the Forex Technical Market Update for the brand new month of August 2015. And patience is the name of the game. In a situation like what we're seeing in the markets are essentially in consolidation patterns. Look at the daily chart of the the British pound versus the US dollar. We see that over the last couple of weeks, 2 weeks or so, the market has been stuck between 155 and 150. Now, if you are a channel trader or a scalper, essentially this could be your dream scenario, because when the markets are stuck in these levels, you can be scalping all away. But if you are a swing trader or a position trader and follow trends in the market, what will happen at this point in time? What we're doing is setting up ourselves for the big move, because the longer this market stays within this consolidation pattern, is the larger the breakout. Now, and that's the difference between swing trading and position and scalping. Swing traders, we just sit and wait. We have our position set and we wait for the market to move. Being a swing trader or a trend trader, more specifically, it's akin to being a lion. I mean, if you ever observe lions for a long period of time, they don't just go hunting all day every day, running up and down like a chicken without a head. They sit and wait and look for the perfect opportunity. And when you're swing trading, that is the approach you take. Just because the markets are open doesn't necessarily you have to be in and out and the markets trading constantly. We sit and we wait for our ideal setups and our ideal trades. And that's what separates amateurs from the professionals. Professionals have the discipline to sit and wait for the markets to do what it does. Okay, so taking a look at the British pound versus the USD, we have a consolidation pattern, and the boundaries, essentially the upper boundary is at the 150 157 level. Now this market could really break either way. It could break to the upside or it could break to the downside. And our portfolio is positioned for a break to the upside. If it breaks to the downside, we will take a small loss. Now, taking a look at the euro versus the US dollar, we have a situation where the market also is in a consolidation pattern, which is often the case during the summer months. But the good thing is that when markets are in a consolidation pattern, now is the time to be anticipating the next break, because when the market does break, that's when the profits are being made. And if you don't get in ahead of the break, you will be finding that what you will be doing is chasing the market. So this market is still in a downtrend, but a the consolidation pattern it's in a consolidation pattern in a downtrend. And what normally happens in this situation is that the market will normally break to the downside the majority of the times. But that does not mean the market could not break to the upside. And if that does happen, you will get a small loss. If the market continues to the downside, we will see rapid growth in our accounts. Now, a market that of note that we have been looking at over the last couple of weeks is the Canadian dollar. And what we saw was that the Canadian dollar actually closed at a high point last month. And you remember, well, for those of you who did not see the analysis before, what we have in front of us is a monthly view of the Canadian dollar. And we see that the high is at 130.64. Let me just draw a horizontal line at 130.64. Now, interestingly enough, the close on this market was at 130.85. So the market actually did manage to close above these resistance points. Remember, these resistance points, every time the market will go up to this level, it has been rejected. This happened on 4 occasions. We have 4 occasions that the market got rejected, and these are monthly time frames. And the market finally closed above this level, and this is the highest close in the USD versus Canadian dollar since 2004. We're in 2015. That's a long time. It's 11 years. So this is a 11-year high with the USD versus the Canadian dollar. Now, it's interesting, or the interesting thing to look out for in a situation like this is to see if the market continues. Yes, it has closed above the level, but would we see follow through buying to the upside, or would we get the market just reversing and collapsing? And that is something we have to keep in mind, especially at these breakout points. Currently, the market looks like it is trying to rally and get some follow through buying with the USD versus the Canadian dollar. Naturally, this is very bearish for Canadian dollar pairs, and we see that the the British pound versus the Canadian dollar is also rallying. We have been following this market for some time, and we see that the market made a new high today near the $2 205.84, closing on this 206 level in the British pound versus the Canadian dollar. So the Canadian dollar will be the currency pair to keep an eye out on this month, to see if we see continued weakness in the Canadian dollar, or the market will snap back. Currently, our portfolio is long this market. We're long British pound versus the Canadian dollar, and will remain long until we see some evidence of a pullback. Okay, that's it for the Forex technical market update. If you'd like to have these trading signals, remember, now is the time to get involved. We're at the beginning of the month, and we see consolidation happening, which is a good time to get in, because when the market starts to move, what you'll find is that you will be chasing the market. So if you'd like to get involved in the signals, you can click on the link below this video. And I wish you all the best for this month, and I will see you again tomorrow. Thank you.